Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hey everybody, I'm Troy Moling and welcome to this week's edition of Market Journal. Thanks for joining us today. Last show of October, it just seems like the year is flying by, and we've got lots to get to on this week's show. We'll talk about some proposed new ethanol rules, some important FSA deadlines, and a really cool weed seminar. Also, this week's market analyst will join us in just a second too. First off though, let's do a quick check of the crops. The USDA reports corn harvest is nearly halfway done at 49%. That's ahead of last year's pace of 37%. Soybean harvest, that's even better at 53%. It's still way behind that 5-year average of 69% though. Switching gears from crops to cattle now, and the latest cattle on feed report was released. And as is usually the case, we had a few surprises in the report. Dr. Josh Maples is here to help us sort through the numbers. He's an assistant professor and livestock extension economist with Mississippi State University. Josh, thanks for being here today.
Thanks for having me, Troy.
When looking at the latest cattle on feed report, the first thing a lot of people noticed was the placements number. Bit of a surprise there?
Yes, it is. The placements number was probably the number that stands out the most in this report. Importantly, it was about 4.6% lower than during September of 2017, but even more importantly, it was about 5% lower than our pre-report expectation. So we're looking at a total placements number of 2.05 million head of cattle. And if we think about that number being lower than we expected it to be pre-report, that really adjusts down not only the placements number, but it also adjusts down our expectation of what total supply was going to be. And that's the number that, quite frankly, led to the strength that we saw in futures markets on Monday whenever they opened after the report.
So what is the market's reaction to those lower numbers?
So the market futures prices were stronger on Monday. If you look at the live cattle contract prices, they were up $1 to $2. And look at the feeder cattle contracts, specifically the November and January contracts, up around $3 during trading on Monday.
Do you see any noteworthy trends with the type of calves being placed?
Absolutely. This is a very interesting story. And so if we look at the weight categories of placements, really the trend over the past few months has been placements of lower weight calves, and that trend continued into September. We talked about a decrease in the number of placements relative to last year. Really all of that decrease, or the majority of that decrease at least, can be attributed to placements of cattle weighing more than 700 pounds. We still saw relatively strong placements of cattle in that less than 700 and less than 600 pound categories. And that's been the trend for the past few months. Kind of tied into that, but also is the increase in placements of heifers. So heifers are up about 11% over last year at around 4.3 million head in the feedlots. Compare that to steers, and steers are only up about 2.3%. So we're seeing a larger percentage of heifers in the mix, and also an increase in placements of lighter weight calves. Both of these things have significant impacts on the beef demand picture.
What are the impacts we could see with that in the beef sector?
Yeah, so within the beef sector, if you think about placements of lighter weight calves, that really is going to ultimately lead to lower average slaughter weights because those calves just typically on average don't weigh as much whenever you process them as well. And the same is true for heifers. You know, heifers don't weigh as much as steers do whenever they're processed. You put these two pieces together and we're looking at, we may see an increase of a certain amount in head slaughtered or head processed, but the corresponding increase in beef production won't be quite as big. And so that can help to moderate the supply of beef moving forward.
And in addition to the placements number, marketings were down too. What do you think happened there, and does it concern you?
So the marketings were down 3.6% compared to September of 2017. That is certainly a number to keep an eye on. I will say that for this report, it was very well anticipated. I don't see a lot of market impact as far as prices for that number coming out of this report, because we expected that number. But it is something to keep an eye on. We've got large supplies of cattle. Even with this lower placement number, we've still got a record large number of cattle on feed right now. And we're going to need strong beef demand and a strong marketing rate to work through these large supplies. So I'm not concerned yet. I don't think it's to the point where we should be very concerned about it, but it is something we need to keep an eye on moving forward.
What are some short-term and long-term impacts of the report?
So short-term, I think we need to begin thinking about our supply expectation, and that really is how the impact of this report is being seen in the market. So if you think about how we come up with a supply expectation, we try to get all the information that we have available to us in terms of reports, in terms of sales at markets and other things. And really, we're just constantly updating our expectation of the amount of supply that's out there. And the ultimate goal is to try to figure out, okay, exactly how much beef are we going to produce? That's one side of the supply and demand equation. And so this report with the lower placements number, and you combine it with some of the past reports too, you really start thinking about whether or not we have quite as many cattle out there as we expected pre-report. Now, there's still a very large number of calves out there, and there's still a very large number of calves that are going to have to work their way through the system. Remember, we've got record large number of cattle on feed, but at the same time, maybe it's not quite as large as we might have expected pre-report. And so I think that's the short-term impact. Long-term impact, I really think you start looking at those number of heifers in the mix, and you combine that with the cow slaughter data that we are seeing, and it really tells a story of lower retention of heifers on the farm, and also maybe liquidating a few cows as well. So I think it tells a story of a flatter herd number.
Finally, what are some of the big questions cattle producers are asking you this time of year, and what do you tell them?
So I would say there's a couple of questions. The first big question this time of year is always, when do I sell my calves? And so a lot of producers have already made that decision. There are some that are still holding on. Most yearlings are gone by this point, at least in this part of the country. But my response to that is, we've seen some pretty strong markets, some pretty strong market prices this year. We haven't seen the large seasonal decline that we might expect, especially in times of larger supplies. So this year, I think the story really comes down to how well you can manage your cost of gain. And if you can put pounds on those calves cheaply, then you can afford to hold them out and not be quite as concerned about the market price falling out on you. The second piece is kind of connected to the previous question. Producers want to know, when are prices going up again? When's the cattle cycle going to turn back down? And I don't think we have enough evidence to suggest we're heading towards any kind of declines in the herd, but I do think we've got some evidence out there to suggest that over the next year or two, we're going to see quite a bit more flatter herd numbers. Using the cow slaughter numbers and the heifer slaughter numbers, I think we can expect to see a relatively flat herd growth over the next year or two.
Dr. Josh Maples, we appreciate you taking the time to share your insight with us today. We'll do it again soon. Next week, we'll be joined by Doug Simon. He's a risk management consultant and commodity broker. If you have a question you'd like for me to ask Doug, email us or get in touch on social media, and I'll pass your question along. Earlier this month, President Trump directed the EPA to change the rules and allow gas stations to sell E15 year-round. Right now, it's not allowed during the summer driving season. E15 is a blend of 15% ethanol and 85% regular gasoline. I was recently joined by Sarah Caswell of the Nebraska Ethanol Board to learn what this news means for the ag industry.
In these times, ethanol, which is generally conventional ethanol, is made from cornstarch. It provides an extra value stream for farmers, and so we also have oversupply issues, and it provides another value stream so that oversupply is less than it otherwise would be, which then keeps the commodity prices, or helps keep the commodity prices as high as they can be, even though they're generally low right now. So we're hoping that with the policy support from a year-round E15 sales and other things, a strong renewable fuel standard, et cetera, that farmers will, continue to have the current market and then even a more bolstered market going forward, which will then, of course, even further help with supply issues, commodity price issues, et cetera. So it's really important for farmers, especially now.
And at a recent rally in Council Bluffs, President Trump said that he is going to, quote, unleash the power of E15. What does that mean for farmers?
Well, we're hoping that that's the case. It means a lot for farmers. President Trump is directing his EPA to basically engage in a rulemaking process that we hope will be completed by next summer. Reason is that there's an archaic rule that I won't bore you with the details of, but retailers can sell E15 anywhere in the United States except for during the summer driving season, which is between June 1st and September 15th. And so this unleashing that President Trump is talking about would basically be going through a rulemaking process to update that old rule to allow the year-round sales of E15 throughout the whole country. And we're hoping that that happens because there are some statistics that show that if this happens, over the next 5 years, it could increase ethanol demand by 1.3 billion gallons, which would mean a huge new market for farmers and hopefully would help with commodity prices and sales.
So what would you tell someone who says that this new proposal is going to have consequences for the environment?
The funny thing is it's actually going to have good consequences for the environment. This old rule was made back in 1990 when E15 wasn't really on anyone's radar screen. And basically the technical term is a reed vapor pressure waiver. And so during the summer driving months, June 1st to September 15th, there's an RVP 1% waiver given to E10 because of the evaporative emissions that comes out of a tailpipe during the heat. And the funny thing is that the more ethanol that you have blended in gasoline, the less evaporative emissions, the less pollution that goes into the air. So from a scientific perspective and an air pollution perspective, there really is no concern here.
Also of note, for the past 2 years, Nebraska's state fleet vehicles have all been running on E15 year-round. Now, earlier this year, the EPA approved Nebraska to allow 50 conventional state vehicles to run on E30. So the plan there is to evaluate how E30 impacts cost per mile, engine performance, and driver satisfaction. From conservation programs to disaster assistance to loan help and so much more, the Farm Service Agency is there for farmers. Cathy Anderson of the FSA joined me on the show to talk about some important upcoming deadlines and what the agency is working on right now.
The Farm Service Agency, or FSA, has been in existence since the 1930s. And essentially it's the agency that administers the federal farm programs that are legislated by Congress. Currently under the 2018 Farm Bill, the programs that we've administered included our commodity safety net programs, such as agriculture risk coverage and price loss coverage program, our conservation programs that are there to protect natural resources and enhance water quality, and one of those primary programs is the Conservation Reserve Program, price support programs such as our marketing assistance loans, disaster programs such as our non-insured disaster assistance program. We also have farm loan programs, and that includes direct and guaranteed operating and farm ownership loans. And so there's a variety of programs. So we just encourage everyone to visit our offices and find out about all of those.
And I want to talk a little bit about the USDA Market Facilitation Program. If you could give us a little bit of background, a little bit of a refresher on that, and tell us what farmers can do and let us know if there are any updates with that program currently.
The market facilitation program was announced by the Secretary in late July, and it was enacted in order to provide some direct payments to producers that have been affected by the disruptions in the foreign trade markets. So the program is there for producers to apply anytime between September 4th and January 15th, 2019. So it's important that they do the application process by that January 15th date. It's really kind of a two-step process in that after they apply, they also certify their total harvested production. So they need to know that number before they can complete that step. But they actually will have until May 1st, 2019 to complete that part of the process. It's a very streamlined process. Producers essentially come in and complete a form, a CCC 910. They can come into our local office. We've got 71 offices across the state and complete that. They can go to a website, which is farmers.gov, and print that form off to complete it and then submit it by mail or fax or email. It's a pretty simple process. Producers do not need to bring in production evidence when they come in, but they do need to make sure that they keep it on hand so that if the application is reviewed at a later date, they can substantiate the number that they provide. Once the application process is complete, there's an initial payment that takes 50% of that total production times the payment rate that's in place. And in early December, USDA will determine whether there will be any additional payments for the eligible commodities that exist.
And while we're on the subject of deadlines, any other deadlines you want to tell us about?
There's some important deadlines this fall. One we want to raise up is our November 15th acreage reporting deadline. That's reporting acres for the 2019 fall seeded crops and perennial forages. We also have a couple of new deadlines that are earlier than they used to be for the non-insured disaster assistance program. That's the program that provides risk management coverage for crops that are not covered under our traditional federal crop insurance. Mm-hmm. And so we have a deadline there of November 15th for grass, mm-hmm, and November 20th for aronia berries and grapes. So again, very important that producers get in and get that coverage in place so that they have it for the 2019 growing season.
And finally, what are some things that FSA is working on as we close out the year? Maybe a sneak peek into what's in store for 2019.
Sure. Well, there's always a lot going on. Currently, we are in the process of issuing payments for the 2017 year under our Agricultural Risk Coverage Price Loss Coverage Program. And concurrent with that, we're also issuing payments to producers that participate in our Conservation Reserve Program, the annual rental payments. So we're working to get those processed as quickly as possible. I just encourage people again to take advantage maybe of these days they can't get in the field, get in contact with their local office, see what maybe they can do today that they can get taken care of before they get busy again.
We've got that website one more time. That's www.farmers.gov. That's an important site to get that Market Facilitation Program application. The address is right here on the screen. Then there's FSA's site, which is www.fsa.usda.gov/NE. You can also check out FSA on social media or call your local office with any questions. At the Nebraska Extension Soybean Midwest Production Clinic in August, agronomists and producers were asked to participate in a ranking process on the importance of various soybean traits. They ranked yield potential, herbicide trait technologies, and relative maturity as the three most important factors. Recent research and management practices are causing some agronomists and producers to rethink the importance of soybean relative maturity. Read about the advantages of diversifying and leveraging different relative maturities in the October Nebraska Farmer. Weeds in your field can be pretty scary, so it would make sense that an upcoming weed seminar is taking place on, you guessed it, Halloween. I sat down with the University of Nebraska Extension Weed Management Specialist Amit Jhala to hear what attendees can expect at the event.
So Weed School will be like a one-day event that will cover a number of topics in weed science, plus herbicides and so many other things. And we have a great speaker because dicamba-resistant soybean came to the market last year, and we had a number of off-target injury issues. So we have at least 3 or 4 different presentations about this topic. Colleague Jenny Rees, she's an extension educator. She's going to discuss how forensic analysis can help to detect dicamba injury in soybean.
And as far as a lead speaker, a keynote speaker, do you have one for the seminar?
Yes, we have invited my colleague Dr. Kevin Bradley from University of Missouri. He's going to speak about management of herbicide-resistant common water hemp. He has at least 15 years of experience conducting research on management of water hemp in corn and soybean cropping systems in Missouri, and it will be very useful to listen him.
And talk a little about who this seminar is geared toward.
This seminar is for everybody, including growers, crop consultants, certified advisors, or land managers. Anybody interested in weed control, they will find something very useful by attending this weed school. And
what's your main goal when someone leaves this seminar? What do you want them to come away having learned?
We just wanted to make sure they learn how to control weeds, number one, and also how to use cover crops, for example, to suppress weeds, as well as which are the best management practices to reduce the off-target dicamba injury.
All right, and switching gears for a second, some of our viewers may not know that you actually head up a weed management lab at the university. Maybe tell us a little about that and what you're working on right now and as we head into 2019.
So my objective of my program is number one, to control glyphosate-resistant weeds. In Nebraska, we have at least 6 weeds that are resistant to glyphosate, and management of those glyphosate-resistant weed is a greatest challenge for corn and soybean growers. So that is my first objective. We conduct a number of trials every year to find out alternate herbicide programs to provide effective control of glyphosate-resistant weeds. The second objective in my research program is to see how the reproductive biology of weed can affect the spread of resistant weeds. For example, how the pollen-mediated gene flow can spread resistant weed from one field to another field. So we have conducted a number of trials in the last 2 to 3 years, and now we know common water hemp resistant in common water hemp can also be spread through the pollen movement.
Important here. When is it? Where is it? And how do you register?
So our weed school is on October 31st. It's Wednesday, and it's like a Halloween day. So it will be at Eastern Nebraska Research and Extension Center near Mead. And registration is free, but we encourage everyone to pre-register at our website agronomy.unl.edu/weed school.
You heard Dr. Jhala mention the website. We've got it for you right here on the screen. Also, he wants everyone to know that lunch will be provided, so come on out. It should be a really good time. It's time now for weather with Nebraska Extension Ag climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, we've had a pretty calm and stable weather pattern this week. How are things looking as we wrap up this month and head into November?
Troy, you are exactly correct. We did have a nice stretch of warm, dry weather, and we actually seen some pretty significant gains in terms of harvest activity. Sunday's report from NASS basically indicated that we were over the 50% mark on soybean harvested, and corn was up around 35%. So we gained about 16 percentage points on the soybean harvest, and really most of this soybean harvest started to occur after Wednesday. So with the few dry days earlier this week before our system coming in midweek, we would expect that we would see some pretty significant increases in the amount of harvested acres for soybeans, and I wouldn't be surprised to see us somewhere between the 70 and 80% harvested by the time we see the Sunday report, and corn probably pushing over 40%. Now, we did see some activity with that system moving through there in the midweek. Primarily the heaviest precipitation was in south central Nebraska, generally 1/4 to 1/2 inch, with a few isolated totals approaching 3/4 of an inch, and most of the remainder of the state was generally between 1/4 of an inch and about 4/10 of an inch south of Interstate 80. So today what we have now is a little trough that is built to the east of us with that system that passed through us earlier in the week, and we have a little reinforcing shot of cold air coming down the pipeline for this evening. we have low pressure at the surface both in eastern Dakota and in northwest Kansas. This low up here in the Dakotas will be the primary focus for precipitation as it slides toward the southeast, just clipping northeastern Nebraska, and at best we're looking at a 1/4 inch up in Minnesota out of this precipitation. We see high pressure reestablish itself on Sunday. Cool conditions with that front coming through will be primarily in the 50s statewide as the precipitation starts to shift over the Great Lakes with a little bit of light snow possible. And then we see the ridge moving toward the east, bringing us a southwest flow at the surface. We also have low pressures trying to develop at the surface. This will increase our winds from the southwest, bringing us a much warmer day, and we'll see temperatures primarily in the 60s on a statewide basis, with most of precipitation up in the Pacific Northwest. By the time we get into the day on Tuesday, we'll see this big trough digging a large carving pattern across the United States, with low pressure starting to develop in eastern Texas and Missouri. That will start to feed some moisture up, and we'll see some precipitation potentially breaking out in northern Missouri and southern Iowa. And as this trough moves toward the east, it will strengthen, and we will see a tremendous amount of precipitation along this front as it moves eastward, as we see low pressure moving along the Gulf Coast, really throwing the moisture up into this region with very heavy precipitation likely from eastern Texas through the lower Ohio River Valley. And that trough remains in place as we go into the day on Thursday. We do see that system coming into the Pacific Northwest, but it'll be a few days before it gets here. Low pressure once again showing up from the Texas Panhandle up into eastern Iowa. That will help to reinforce the moisture along the front and actually shift some moisture up into the central Rockies, with a piece of energy breaking out of this trough moving into the Pacific Northwest on Friday. Low pressure indicated the surface developing in southwestern Nebraska, but there really isn't anything for moisture to feed this. So any of the moisture that does come up into the system looks like it's going to be primarily an upslope flow, and it will primarily affect the western 1/3 of the state. We look a little farther out into the future, next Thursday through the following Tuesday, below normal temperatures as that trough begins to move into the Intermountain region in terms of precipitation. Widespread precipitation, and this system is expected to make a tremendous impact on the Central Plains as we get between the 5th and the 7th of November. So Troy, looks like decent harvest activity for a few days, and then things fall apart later next week.
Thanks, Al. That'll do it for this week's show. We'll see you right back here next time. Until then, I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.